the National Housing Bank has proposed to increase the capital adequacy ratio, reduce borrowing limits for housing finance companies over the next 3 years. So it's just a call that's coming in advance, and these rules have not kicked in yet. The NHB, the regulator, has called for an industry response by March 31st, and thereafter the higher capital kicks in. Just to revise, the higher capital is, it's at the moment they have to keep 12% capital. By 2022, the proposals say the capital has to go up to 15%. Also, that impacts the amount of borrowing, the amount of times you can lever. Thirdly, there are borrowing limits also that have come in. Kunal Shah, the Associate Director at Edelweiss Financial Services, joins us now. Good morning, Kunal. Thank you very much for joining us. In your reckoning, who are not going to be impacted by this increase in capital call?
Yeah, good morning. So overall, when we look at most of the housing finance companies, they already have the capital adequacy upwards of 14% odd. And when we look at it, a significant part of it is, say, Tier 1 capital. So overall, there is still enough of a legroom for them to raise Tier 2 capital as such, provided that they fall very well within the leverage cap, which has also been proposed by NHB. So I think most of them are comfortably placed given this kind of a capital adequacy, but still within this entire set of housing finance companies, the players wherein the capital adequacy or Tier 1 ratio is relatively low, still much above the overall regulatory requirement, are say Divan LIC and PNB Housing Finance, which are somewhere around 14% odd.
Okay. All right, 14%. Kunal, what are your top picks in the sector now? And from your ground checks, is there any indication that the worst of the liquidity crisis is behind us?
So overall, over last 3-4 months, we have been very closely monitoring the liquidity and how the flow of funds is impacting the overall developer financing segment. So as far as the retail is concerned, we have seen the traction coming back. So most of the housing finance companies have started the disbursements, at least for the home loans. However, as far as the developer financing is concerned, there are no new major incremental commitments which are there. Maybe from the past sanctions or for the or at the construction stage, there is further disbursements which is happening. Considering this entire scenario, we believe HDFC Limited is well positioned to consolidate their leadership positioning, given the other players are going relatively slow. So we see them benefiting overall in terms of growth, in terms of pricing power, and even on their non-individual book, the asset quality would be well maintained for them. So our top pick within the housing finance space is HDFC at this point in time.
Okay, I just want to know any casualties because of this limit on borrowing. I think now the borrowing is going to be capped at 12 times the net owned funds. It used to be, it is at the moment 16 times. It'll get capped. Anybody affected seriously because of that?
Sorry, I didn't get you. Sorry.
No, the borrowing limit is going to be brought down to 12 times the net owned funds. Will that affect anybody?
Yeah, so if you look, there are 4 entities which are there at more than 10 times leverage to the net worth. And as I mentioned, few of the names which are there is Divan LIC, GRU and GIC. They have more than 10x. It's still below the but time, maybe 18 to 24 months.
Okay. Well, Kunal, there's a problem with the line. But we've got your point that LIC Housing, GIC Housing, Divan Housing are very close to the borrowing limit, but they're still below the new borrowing limit. And anyway, they have time. So not worried about any of the housing finance companies as of now. I'm just completing Kunal's statement. I assume that's what he wanted to say. Let's do one thing. Kunal, you wanted to complete. You're not worried about GIC Housing, LIC Housing and Divan Housing, right? That's the point you were making.
Yeah, so overall what I'm saying is since the net owned funds for LIC, Diwan, GIC and GRU is upwards of 10 times as compared to what was earlier 16, and now they are asked to bring it down to 12 times. So I think they'll have to go ahead and do some fundraising over next 18 to 24 months.
Okay, all right. We leave it at that. Thanks a lot for joining us. By the way, DHFL on the back of that news flow is now still up almost about 15% right now. Remember, it was up 20% at one point in time. It's come off a tad bit, but it's still one of the big gainers in the NBFC
It's cooling off a bit. I think the market's cooling off a bit from the high point, and perhaps would be healthy, especially from the mid caps. The advanced decline from 6:1, already down to about 4:1. Perhaps you may want it to cool a bit more. The Nifty, of course, at 11,000, 11,030 is what you have on the index. But the mid-cap index perhaps not showing the trending day that it showed yesterday. Of course, early days yet, but suffice to say that, from the high point, the bit of a slip which is happening. In fact, now both Bharat Forge and Reliance Capital have slipped to the low point of the day. Those are two stocks that we were talking about. Sun Pharma is now at the low point of the day. Just pull out Sun Pharma as well. So there's a bit of a differentiation that the market's making today. Tata Motors also right now at the low point of the day. A couple of these PSU banks like Allahabad Bank, which have been flying very high, they're beginning to correct a bit. So Allahabad Bank down, Syndicate Bank also, in fact, is down in trade today. IRB Infra also a bit soft. So, of course, the winners are still outnumbering the losers and by a margin, but just a bit of a cool off from the high point.